Investing in index funds is a popular and straightforward approach for beginners looking to start investing. Here are some steps to help you get started with investing in index funds as a beginner. 1. Set your investment goals. Determine your investment goals and time horizon. Consider factors such as your risk tolerance, financial objectives, and when you'll need the invested funds. This will help you choose the appropriate index funds for your portfolio. 2. Research index funds. Conduct thorough research on different index funds available in the market. Look for reputable fund providers and compare factors such as expense ratios, historical performance, fund size, and the index the fund tracks. Websites, financial publications, and online brokerage platforms can provide valuable information. 3. Choose a brokerage account. Open a brokerage account with a reputable and low-cost brokerage firm. Consider factors such as account minimums, trading fees, customer service, and available investment options. Some popular online brokerage platforms include Vanguard, Fidelity, Charles Schwab, and TD Ameritrade. 4. Fund your account. Deposit funds into your brokerage account. You can transfer money from your bank account to your brokerage account electronically. 5. Select index funds. Based on your research, choose one or more index funds that align with your investment goals. Consider factors such as diversification, expense ratios, and the specific index the fund tracks. Broad market index funds, such as those tracking the total stock market or a major stock index, are good options for beginners. 6. Place an order. Once you've selected your desired index funds, place a buy order through your brokerage account. Specify the amount or number of shares you want to purchase. You can typically choose between market orders, executed at the current market price, or limit orders. Set a specific price at which you want the order to be executed. 7. Monitor and rebalance. Regularly review your investment portfolio to ensure it remains aligned with your goals and risk tolerance. Over time, your asset allocation may shift due to market fluctuations. Rebalance your portfolio by buying or selling index funds to maintain your desired asset allocation. 8. Stay informed. Keep yourself informed about market trends and changes that may impact your index funds. However, avoid making impulsive investment decisions based on short-term market movements. Focus on your long-term investment strategy. Investing in index funds is a great way to get started in the world of investing. They are a simple and low-cost way to invest in the stock market. By following these tips, you can start investing in index funds and reach your financial goals.